focus. Ideate, innovate, enable.
As India's manufacturing sector rapidly expands, Indian economists can be delighted at what the future holds. Standard Chartered, in association with CNBC TV18, launched India on the Move. Last year, a leadership series aimed at bringing the best minds in the industry to exchange ideas, share experiences, and to gauge the different opportunities for enterprise growth in this dynamic market. We launch another season of India on the Move with a look at all the key insights shared last year. Shireen Bhan discusses the possible recovery from a capex cycle with the industry leaders and what we can do to kickstart economic recovery.
Are you getting any signs, any indications at all that we are on the verge of seeing any improvement at all?
So primarily in healthcare, Shireen, the sectors continue to grow from 11 to 14%, some sectors even growing up to 20% in the primary healthcare. However, I think what we're seeing is across the board, industries who we serve, individuals who we serve are looking to cut prices, looking to cut budgets because there is a pressure across in the sector and in the industry. I genuinely believe that healthcare is a huge area which can enable the country to uptick its economy. In fact, it's very well put that a 10% enhancement in life expectancy gives a 0.4 to 0.5% uptick in GDP. So if we can invest in healthcare, government spending, private, encourage private to spend more in healthcare, invest more in healthcare, this can be one of the tickers to change the pace of growth.
Manish, let me ask you now, whether it is credit offtake, which continues to be anywhere between 5 to 8%, it is the NPA issues that have saddled banks and weighed banks down. What gives you the sense that we are probably going to start to see an improvement or a significant improvement in this year?
Shireen, just to step back, the last capex cycle happened in 2010-2011, and this was immediately followed by a prolonged slowdown. And it was quite widespread because it impacted all sectors and companies of all sizes. So as a result, the leverage levels in the companies are high and the capacity utilizations are low. And as you said, simultaneously that was passed on to the banks as well. So banks are struggling with the NPA issues. Plus we had in the recent times, when the stress was bottoming out, two major disruptions. Demonetization and now GST. So while in the long term, clearly these are seen as beneficial, but in the short run, these do dent confidence of the entrepreneurs to invest.
Lata Venkatesh discusses the challenges and opportunities in digitizing India's banking and payment systems.
Today I have an email address kind of identity on my bank account, and I make a lot of payments. I have paid my maids, I have paid my kirana store wala, I have paid my laundry boy, and I have paid my gardener just by transferring money. But can you tell us, nationally speaking, how the UPI has evolved?
UPI is now 1-year-old mobile payment product. Previously, we had IMPS, Star 99 Hash, which is another mobile payment product. And individual banks have their own mobile product. We launched UPI in August 2016, and in 2017 we have completed 1 year. And as of now, there are 52 banks as members. That means the customers of 52 banks have this facility. As of now, we see 16 million customers. They have downloaded the application, out of which 5 million are active customers. That means they have been able to download, link the application with the bank account, and now they can send money to one another. And the volume is growing, and a lot of action is happening. What is most important, since it is API driven mobile banking platform, that means just structured messaging is well identified.
Okay.
As long as the participants can follow the rules of the game, they can be in the interoperable payment system. So it has been growing.
Okay, let me get Mr. Singh into the picture. Mr. Singh, we have great hopes in both the payment bank and in India Post as a payment bank, because geographically nobody has the spread and reach that you have, and reaching customers who probably are not included in the banking system or payment system. Tell us your game plan.
So, in a word, the game plan is simplify digital payments,
Okay.
so that people at the bottom of the barrel can access them. So, how does this look? You have something like 400 million smartphone owners in the country. You have about 300 million people with feature phones, and I would take a guess that there are something like 300 million who have neither. So adopting a bottoms-up approach, we first get to those 300 million who don't have a phone, and we simplify payments for them, which it might be assisted services where the postman or the Grameen Dak Sevak helps them to make payments, things like utility, and we figure out about a dozen payments which every household makes.
Okay.
So get these people on with assisted services. The second stack that we are looking at is the people, 300 million people with feature phones. And while there is technology is evolving, it's something as old as voice telephony, also we believe could be leveraged.
Okay. Let me come to Venkatesh before I ask the banker. Venkatesh, we have many ways of paying digitally.
Yes.
I am still a very big card user, and I would assume, outside digital card users are also aplenty. Then you have the QR code. You have a lot of people using systems like Paytm, or if it's HDFC Bank, it's Chiller, or each of them have their own wallets.
Yes.
How do all these fall in place? There is the giant UPI perhaps.
Yes.
How do all of them coexist?
So the way we see payments evolving in India is that, if you look at globally the way payments has evolved, it has been typically a duopoly of two different companies. If you look at, the US, it's MasterCard and Visa. If you look at China, it's WeChat and Alipay. In India, we think UPI is what will, really take off. And in the next few years, I won't be surprised if UPI becomes, reaches about 200 to 300 million users. The reason I say that is that, you have Reliance coming in, if you have Paytm, WhatsApp, Google, etc. coming on UPI, then I think that will become one of the largest, payment platforms. So, and of course, if you look at the, the transaction cost, and if you look at the ease of payments, etc., I think, in the next few years, this is probably going to be the most dominant payment system in India.
So will others cease to exist, or you see that even over the next 5 years, many systems will exist?
And I would say that, the other systems will coexist. I think you'll always have a set of people who will use credit cards, etc. But the entire thing with UPI is that the ease of access, the ease of entry into the system, the competition, etc., it's designed to be open, and you could say it's one of the most open payment systems anywhere in the world.
Okay. Sanjay, for banks, the way the UPI has evolved, you all are not losing, you all are actually gaining.
Exactly.
More people will use the banking system. It is not a zero-sum game for you. How do you see banks benefiting and therefore adopting digital payments?
So, thanks. Absolutely. In fact, we see it as a big opportunity. And, there's always a misconception that foreign banks and, are you really going to get affected by what's happening at the bottom of the pyramid? Nothing could be further from the truth. The way we look at it is we've got corporate clients who've got clients who go all the way down, right? When we are servicing our clients, we're looking at the entire ecosystem. We're looking at the entire supply chain finance, for example, right? We're looking at courier companies who are going and delivering that e-commerce thing on cash on delivery. How can you convert that into, non-cash, but still, maintain all the safety features, etc., which is where UPI comes in. So for us, it's a huge opportunity to actually service our customers better, faster, and more reliably. So clearly it's a big opportunity for us.
Do you see yourself tying up with, say, someone like India Post, for instance, and probably maybe giving a loan to someone because India Post has given you their credit record? Absolutely. Is that one way in which banks may think about opportunities?
Absolutely. In fact, Standard Chartered looks at this as it's not about us, bank kind of working in a silo and trying to do things, and we have our own innovation center and innovation lab, etc. But it's not all about that only. It's about partnerships. You can't scale up without partnerships. You have to look at collaboration. You have to look at enablers. And if you look at fintech firms, for example, that there's always like another misconception that fintech firms are going to wipe out banks or they're going to be against banks. Absolutely not. I mean, fintech firms, of course, you could break up fintech firms into three parts. There are disruptors, the enablers, and the collaborators. The disruptor part of it, which erodes our wallet to a certain extent, is a small minority. The bigger piece for us are the enablers and the collaborators with whom we can work together, pick and choose, have JVs, and we're looking at all those options within Standard Chartered, for example. And that clearly opens up the entire ecosystem. It's not, the good thing about what's happened now is, we are kind of in a situation of democratizing access.
Yes.
It's, as I call it, an equality of opportunity moment in India.
Yes.
There's access to info, health, education, etc., which goes from top to bottom. If you are part of that, great.
All right, so opportunities and challenges, because every Indian will leave behind a footprint every time they make a transaction.
CNBC TV 18's Nisha Podar discusses the challenges, opportunities and the future of mergers and acquisitions in India's economic landscape.
Consolidation, big theme, is that conjoining with the debt-laden sector as well? And the point that she made, that it's not just under pressure but to create value. How do you see that aspect?
Some of the larger transactions that we are seeing in the market, as Renuka mentioned, the idea of Vodafone or the Arcom, Aircel, and that might have a telecom theme to it, is under significant market pressures, if one might define it.
Great duress, I would say.
Well,
given presented by some new players.
New players, yes. But as a result, what you're seeing is still people taking these rational calls. You are moving forward. And it is absolutely important to drive these transactions to consummation, because without that, the survival of some of them is in question. But the second bucket of transactions which Renuka referred to, which is where the value-creating transactions or and the deals which drive a better outcome independent of any pressures, it's still far and few. There are still attempts at it, but consolidation where there is no need is still not an everyday instance.
Okay, let me counter that. Renuka, do you think that some of the financial services consolidations have not been so much under distress, but more for creation of value and probably complementing each other's portfolio?
Yes, that is true. In financial services, we have seen a few transactions, and also in PE-led financial services, this is, in fact, we invest only with the explicit objective of consolidating those companies, with bigger companies who can bring, especially the liability side advantage in a financial services play.
All right, and I'll give the final word to Topsy then. From your vantage point, how do you see the deal flow continuing, and any few things in terms of regulatory hurdles which can be cleared off for the financial investor, for the foreign investors to really invest more towards India?
Well, I think from a general outlook perspective, I think the markets are doing well. From an M&A outlook perspective, I think there is a gentle uptick, and clearly we are seeing good deal flow. So it is looking positive. Now, in terms of things that can, there have been significant regulations which have come into play in India on an overall basis. GST has been very positive. We are clearly seeing a scenario where there's regulatory stability for fairly long periods of time. I think none of the challenges that we had on the tax front exist today. I think things have been quiet from that perspective.
Dismantling FIPB.
Yeah, dismantling FIPB has been a big positive. But if I were to pick one area where there could be a little bit more work is still around delistings in India. I think there is still capital available to take companies private, potentially relist later. Those sort of opportunities we miss out on because of the challenges that people face in delisting and taking companies private.
All right.
Yes, interesting trend I think you will see in the next year or two is hostiles, and not just necessarily through the open offer route, but this IBC and bankruptcy process is going to allow hostile acquisitions being made through the IBC process, because anyone can come and bid at the in the resolution process. The promoter and the debtor's power to sort of resist has been taken away, and it's with the creditors. So the dynamic, the erstwhile dynamic where promoters could hold out against hostile acquisitions, that has fundamentally changed. So if I were to just do a little bit of forecasting in terms of what new trends you might see in the next 1 or 2 years, watch out for the hostile theme.
And that's precisely the reason why one of the promoters, while closing one deal, has made enough money to build the war chest to bid for his own asset when it goes for the bid process as well. So very, very important takeaway.
Experts and thought leaders from the banking and IT industry came together to discuss digitization, disruptive technologies, and innovations in the banking sector.
Banking on digitization itself is symbolic of what we think is going to drive banking for the next many years to come. Digitization and everything around it, and everything that is part of the ecosystem of digitization. Now, what makes India unique is the fact that we have a very strong government push, in addition to, of course, the normal driving factors of mobility, technological revolution, client needs. We have a very, very strong government push in the form of changes made by the government, and also an NPCI kind of organization which has dramatically changed the landscape of payments in India.
I think it's a great event organized by Standard Chartered Bank, getting participants from the government, the corporates, the industry folks to come together to ideate. I mean, during the session I was able to pick up some ideas that I can go back and implement in my company, which is related to FASTag, which is basically means that any vehicle that is going to get manufactured in the country is going to come with a FASTag. How do we latch onto it and make sure the insurance can be issued using the FASTag?
I think the future of digital India is very bright. A lot of things which has happened in India are now getting replicated elsewhere in the world. So take UPI as an example. This was something which happened last year in India, and now we see that happening in Singapore. It is called Pay Now, and it is evolving there. We see that happening in Thailand. It's called PromptPay, and again something which is evolving. So a lot of things which is happened in India is being picked up in elsewhere in the world. But with this whole move towards Aadhaar-based payments as an example, it will be a big thing. In many ways, it will also help companies solve real problems which people are facing by making things more digital.
This event is creating an environment for people to communicate and exchange ideas. Right? There are companies from different industry, there are companies also from the same industry. They had opportunity using this environment to exchange ideas, and that's what Standard Chartered Bank is hoping to contribute to this community.
Focus, ideate, innovate, enable.